That sound, the closing bell of the New York Stock Exchange. It was quite an interesting day, a big drop in the beginning in the red most of the day, but then it made up ground, ending the day relatively flat. We see the numbers sort of figuring themselves out there, about 10 points it looks like.
Yeah, I've never seen it so close to being flat, actually.
Literally flat.
The S&P 500 and the tech-heavy NASDAQ both took slight losses as well. But what does this all mean? We've got Dory Wiley here with us now. He's the president and CEO of Commerce Street Holdings, and it's great to get your expertise. One of the things we're waiting on are some Q4 earnings for companies like Tesla and Microsoft. I don't think we've seen it yet, but from your point of view, what's driving the market today?
Well, it's expectations driving the market today. It should be earnings. We really should be focused on earnings because analysts have been cutting earnings expectations like crazy for the fourth quarter. And with the first companies coming in out of the S&P, they've been missing those expectations by about 30 to 40% more than they normally do over the last 10 years. So I think we can probably expect some misses on these two. But, as we saw with Microsoft today and their bad news about cloud and stuff, the markets are, whatever. What is the Fed going to do? I don't think they're going to raise rates as much, so maybe we're over this. So I think the market's probably still a little ahead of itself in its expectations when it should be focused on earnings.
Well, the other thing that obviously has people talking, Dory, is the thousands of layoffs, and particularly across the tech industry. How alarmed are you seeing those headlines? I know whenever we start to see mass layoffs in companies cutting 10% of their workforce, we all start to get nervous about our country's financial health as well as maybe our own job security.
Sure. We have to kind of get in the mind of the Fed here. So back to what the market's wanting. They want the Fed to quit raising rates. And the Fed wants to quit raising rates when it knows that it has control on inflation. And one of the signs for control on inflation is what? Layoffs.
Dropping those jobs, right.
Got to have. So that's actually a good news thing. So we see some controlled layoffs and disciplined layoffs and companies still making money. I don't know that it's going to be all that bad. That's not good for you if you're one of the ones that got laid off. But it's better than having massive layoffs. What we don't want, we want a soft landing. A hard landing, a crash, is 20 to 25% on unemployment. We don't want that.
And some people are now predicting, okay, a recession is coming, but perhaps it's a recession with a small r, in that it's not going to hit as hard, it's not going to hit as many people. I'm curious of your view on that, and also the news of home sales declining. There was a segment we had earlier about incentives now sellers are making. What does that all make?
You hit the nail on the head. And that's what everyone should be asking. It's not, are we going into a recession? Is it going to be a mild recession?
Right.
Or a really bad recession where it's a depression or a crash? That's the answer. And that's what the Fed is trying to engineer. Mild recessions are okay. And that's what we hope. So far, and no one's really been able to do this yet, but they should give them some credit because they've had some massive rate hikes, and so far the economy's held up really well. So they're just going to keep doing it and until they get through this.
Dory, you said something to Errol and me before we came on air about sort of the economic uncertainty that we seem to be feeling, and I just thought maybe you'd share that with our viewers as well.
Sure. Everyone I know out there is predicting recession, right? So it kind of gets back to two things. Everyone predicting the same thing, which kind of makes me immediately react to maybe a contrarian view. But two, the real question should be what you asked earlier, which is how bad a recession, okay? So I don't think it's going to be as bad. And the main reason is credit. Credit cycles drive economies. And if you look at the banking sector, it's the strongest it's ever been going into a credit cycle downturn. And it's had record levels of capital. They're not doing crazy things on lending, et cetera. So if we get back to your housing question, I saw something in the New York Post from Goldman Sachs forecasting 25% decreases in housing in San Jose, Phoenix, San Diego, and Austin. I thought that's not going to happen because we don't have the leverage issues and the crazy credit issues that we had in 2008. There may be a decline in those cities, but it really is more dependent on what the rates are and how that affects the consumer rather than over-leverage in the financial system.
It's an important point.
With that West Texas twang that you have, Dory, I could just listen to you all day.
You're very kind.
Welcome back anytime. Dory Wiley, we appreciate you.
You bet. Thank you.